Hi, my name is Alex Carlucci with Gustan Show Associates. I want to talk to you today about how underwriters calculate income. I'm not going to give you every possible scenario. I just want to give you some ideas because a lot of you out there think that you make this much but you can't use it. So perfect example is if, let's say, you're halfway through the year and your year-to-date is $50,000. So you think you're making $100,000 a year. Well, is that $50,000 a salary? If it's a salary, then you're good. So if you got a fixed salary of $100,000 a year, I can use it no matter what you made the year before. But let's say that $50,000 is higher than last year's midway point of the year because you're getting a lot of overtime, but you had no overtime the previous year. I can't use any of your overtime. I can only use your full-time salary. So if you made overtime every paycheck this year, I can't use it unless you've had 2 years of making it. So underwriters are going to take out that overtime. Now, if you've had 2 years of overtime, I can average it. So I can't use your great year. I have to average it with your lesser year before and the prior year too, because we're halfway through this year. So they could do maybe a 30-month average, which is like 2.5 years, to at least get some of that good year that you're having this year into your 2-year average. So that's one of the way they'll look at it. Now, bonus is the same way. If you're getting bonus income, you have to receive it for 2 years. You can't use it. Hey, I'm getting a bonus in December. I haven't gotten it yet. Can't use it until you get 2 years of bonuses. Then we can average it. Now, if it's declining, it becomes a little more complicated. So if you're declining overtime, they're not going to average it. They might go off the lowest amount, or if it's declining so badly, they may not use any of it. So keep that in mind. We always want incomes increasing, not decreasing. And that brings me to self-employed income. If you're self-employed, you own your own corporation, your adjusted gross income is $30,000 one year and then $100,000 the next adjusted gross, they'll average that. So you're going to be making $65,000 a year. But if you make $100,000 one year and $30,000 the next, they may render your business going out of business and not use anything, or best case scenario, they'll give you $30,000 a year income. So when you're self-employed, the increasing, decreasing becomes very, very, very important for what we're going to use for income. So keep that in mind. Another thing, when you're 1099, they're going to go off your adjusted gross income. They're not going to go off what your 1099 is. So you think you make what your 1099 says a year, but you write everything off against it. So they're going to go off the adjusted gross. It's like being self-employed. You don't get to use the big number. You get to use the little number. So keep that in mind when it comes to income. And if you have any questions, please call me. My name is Alex Carlucci. I'm with GustanShow.com. My phone number is 630-915-7550. Please subscribe to our videos. Thank you.